day one of the mentorship. So just for the record, obviously this is just being, pushed onto YouTube. I'm just making this for everybody and for anybody who gets a hold of this, right? So if by any means this becomes public, hey, that's great to learn, right? So this is for futures, this is for Forex. Honestly, this series of videos is probably going to be helpful for any type of trader slash investor. There's just a lot of information that could help anybody and everybody. Now, at least watch this for the next few minutes because, I'm going to show you why you should believe me, right? So, anyways, I want you guys to kind of peep these two pictures, right? Because these are my setups. Now, I don't know. Yeah, I can zoom in. So, just kind of have to admire it, right? So, what does the purple box mean? Why do you see basically double bottoms, wicks, basically, candles and massive wicks in that zone, and then all of a sudden over here, and then you see that arrow. And next thing you know, what am I expecting to trade? So, we're going to talk about all those type of things. Sure, it might not just be in this video, to be honest, because this is more of to getting people familiar with just the basics of trading, right? Just the basics of mindset, psychology. I just want to completely just start from scratch. Let's take a break from trade recaps and talk about exactly why and what goes in my mind from the second I step onto the charts and what I'm doing after the charts, right? So behind basically the closed doors and curtains and everything that you should be thinking and keeping in the back of your mind, as well as a full-time day trader if you want to be profitable. So that's a big if. Now it requires a lot of commitment, it requires a lot of time. This one too, I think this one was actually just this week. I think this was Tuesday's setup, if I'm not mistaken. Pretty simple, right? So pretty simple. You have to understand, you have to read candles, all right? So we came up, came down, came up, came down, big wick, indicating we have some type of weakness over here. Came down, came over here, now we're just consolidating. Now when there's consolidation, that means that there's going to be orders somewhere around that, right? So you saw that big wick, and then we just flushed, came back up. Now we came down, we came below that wick, and then you see a wick over there. The candle closed upwards, indicating that there's something over here. This candle, massive wick to the downwards. You have to kind of understand that that's like I don't really know candle patterns as much, and I'm just keeping it a buck. I don't really care too much of the names, but that's something like a doji, or some people call it like a bearish doji or bearish Dutchman. There's bearish hammerhead or something like that. There's so many people. There's like hundreds of names, man, really. There's like only like 10, 15 different types, maybe 10 different types of candles, and there's 100+ names. Kid you not. But anyways, why you don't really have to understand the name of the candles, but rather understand the significance of the candles. It shows that there's a weakness up there, right? It shows that there's weakness basically above the body where that candle closed. Now, everything in life happens for a reason, guys. I want you guys to brutally just understand that. So as soon as the price actually came down, again, this is all on the 15-minute time frame. I actually didn't even put that in this slide in this video, because that's going to be day 2 that we're going to talk about more specifics. This video is very broad. As soon as I was waiting for a retest at between basically 6:15 to market opening, or it could have even been market opening, but I really don't care about time. You're not supposed to be caring about damn times, because if you care about time, I'm sorry to break it down to you, but as a investor especially, and you're just never gonna make it. That's just the hard truth. So a lot of people think that, just because they see a spike of volume and spike of orders, spike of candles moving at 6:30 a.m. PST, right? That's New York opening session. As soon as the bell rings, I see all this 100-point candles. They try to build a strategy just for that. No. That's exactly why you're not profitable yet, right? That's exactly why you're scared of trading live capital, because you probably don't have enough live capital, because you're definitely not profitable, right? So look, I'm trying to just keep things straight, try to keep it a buck, be blunt about it. I'm not trying to piss anybody off, but at the same time, there's just the hard truth. So if you want to learn how to be profitable, you got to learn how to you got to learn from somebody who's already doing it, right? It might not be word for word. It might not always just be strategy for strategy, sure, that's completely fine, guys. I'm not that type of asshole. You guys bend and mend whatever you hear, whatever you see from these type of videos and into your own. Just back test it. That's all I'm gonna say. If you don't back test, I mean, how do you know what to expect of tomorrow if you didn't understand what's happening of yesterday, right? So again, as I'm saying these things, I'm noting down on my phone right now. I'm like, damn, I could. These are some great things to be talking about in my next video, or maybe day 3 of this series, right? So actually, let's keep this a series. So this is the beginner. This is the first one. We're calling this day 1. Next thing you know, just wanted it to come back up for retest, and it was a boom, dude. It was a minimal fucking drawdown, even with spreads, even with the bid, and I fucking nailed this trade. Wow, I wanted to basically see it come basically below this double bottom, below that double top. It flushed. It flushed basically below. I think it wicked out basically the double bottom of this and that wick. That wick there and this double bottom. So great trade. But anyways, day 1 of the mentorship, right? So by Day Trader 103 RZ, I had to buy a new laptop, a new MacBook just to make this. And just to record it just for you guys, right? So for those who know, in my Discord, which again, guys, is all free, nothing associated to my name or to my brand has a price tag or anything affiliated with it, okay? So please. Anyways, let's get into it. Now, who am I? Now, you could look at this shit. I know how to trade. Right? This was when I was on a plane. I believe this was when I was in my trip to Dubai, because that was a fucking 2.5 days of a flight. So no, it was 36 hours, 36 or 38 hours of a flight. 41 hours back to NorCal. So anyways, who am I, right? Look, I'm an investor. I'm a licensed investor. I was contemplating on putting my license up here, but at the same time, and just blurring out my code number. But at the same time, just like, I feel like that should be more deserving for my Discord, right? But I mean, to each their own anyways. Look, we call this Private Equity Investment Officer. Yes, I am for the level 2 department now. There's a level 1, there's level 2, there's level 3. Some places have 4, although nobody really, that's not really for the Federal Reserve. So, in short, we call it PEI. I was a PEI officer for 3.5 years. And then for the last little over, maybe close to 2.5 years, I was a PEI officer, level 2. Honestly, it's how it works is that I don't know how to break this, but basically everything in the markets, at least New York session, it's algorithm based, not time based. It's algorithm based. I always preach this in all my videos, and especially in Discord. Time is your enemy. If you believe in time, if you believe on placing a trade strictly at market opening or a few seconds before market opening, you are in for a trouble of doom, for a big bowl of doom soup, if you will, right? So, and then after trading, after just working my way up, trying to climb the corporate ladder, I finally became, for the same department that I was nearly working for the last 2.5 years, I became the secondary assistant manager for that same department, which is just big, right? I am officially the youngest person to be part of the management of an investment floor, but it's specifically for that department where all my coworkers are close to retirement. Easily, I think the youngest person next to me. By the way, guys, I just turned 25 in December. I just turned fresh 25. I got job offers literally. It was a few weeks before I had even got my bachelor's degree in finance, right? So, look, my coworkers are all 30 plus, and then there's me, right? I mean, I'm, for the longest and majority of the places I've worked, I worked for a California, I don't want to say the full name, but it's a retirement pension system for employees. I even worked a year for the retirement pension system for teachers, specifically in the state of California. My parents have boasted that a lot. From the people who fix I remember we have Dish, my parents have Dish, so whenever I visit my parents back in NorCal, people, my parents would boast, like, especially people who come to fix your cable or your toilets or whatever, who's doing work on our house. They're typically of older age folks, right? My parents would say, oh yeah, my son's an investor. And as soon as I come home from the gym, or as soon as I come home just to see them, maybe time for lunch or something like that, dinner, see hi. Before I could even take the luggage on out of my own car, my parents would introduce me to the person, to the individual, and they'd be like, hey, your parents, your mother, your father were talking so sweet and so highly of you, young man. You made it proud. You made them proud. You've done well with your life. Then the next question, and I hate my parents. I really curse my parents for this because, it is confidential information, but they would ask me, how do they fund their retirement? I'm always trying to be optimistic, but just the hard truth for investments, and everybody knows this is not related to this, but everything is better when you're younger. When you learn it, when you get invested, when you get started, younger. Because you need time, guys. And it just goes for the whole purpose of college and education as well. You need time. If you give up on this right now, if you quit this video, if you're not watching this video right now, if you already paused, or if you stopped, or if you're not going to finish this video, if you're just skimming it, just stop trading. This is not it. This is a marathon. The journey lives on. Even though I've been trading since what? I remember 2 days after Christmas, I just came out of a 3 weeks shy of an 8-year relationship. And I just 2 days after Christmas, I just was like, you know what? I gotta go to LA, and I just gotta focus on trading. And that's exactly what that's exactly what I did, and that's what had happened right now. I'm not saying you should move to a new place, to a big city or a small city, whatever the case may be, to focus on trading or to focus on growing a certain set of skills. However, for me, I just knew that if I want to take something serious, I gotta struggle, and I gotta struggle in the most gruesome and just brutal manner. And it was just a really mental, exhausting journey. Lost a lot of weight. I could never keep a certain weight, from being skinny to having my veins show my temple to absolutely just having a beer belly, even though I would only eat 2 meals a day, right? Because, come on, college kid, right? Can't afford steak. I can't afford chicken parmesan from Sizzlers or Brew House, BJ's, or, from, what's that, Cheesecake Factory. I live right across the Cheesecake Factory, or down from it, wherever I moved, and it was just killing me. I can't even afford a damn drink over there, man. Think about that, right? So anyways, been trading for 9 years. First got started with penny stocks. Penny stocks, it's a gamble. Again, time. If you don't understand times, you're fucked. Options burned me out. I did well with penny stocks, but options burnt me out. I talk about the story a lot in my Discord, but I just got fucked up. I went what was a nice and amazing trade at first in the middle of nowhere. I didn't pay attention to the news outbreak. It was the earnings of the company, and they just decided to shut down, because this was after COVID, and that's when penny stocks, typically after a huge pandemic of that caliber, some companies grow and many die out. I put 17K in a company, balls deep. From 17K, I was up. I think I was up 19. So meaning like $2,200-$2,300 profit in the middle of nowhere. In the middle of nowhere, that earnings had just came crashing down. So it sucks to say it, but I got out with a loss. I lost literally 100% of my capital and went over. And next thing you know, because I was affiliated with a U.S. broker, they ended up suing me but they ended up pushing that debt to collections department. And I got a notice if I wanted to fight that in court, in a litigational court, or do I just want to take care of that bill. And by all means, no broker should have ever sue anybody or push that type of debt. What's the point of having a broker if you can't even take care of, basically, if the balance goes against me, you should immediately cut that trade off, right? So I got slapped with volume, and it just was something. I remember I was still finishing up community college at the time, and it just fucked me up, right? So it just sucked real bad. So that's exactly why I'm against U.S. affiliated brokers. Anything with U.S., there's a lot of restrictions against you. However, nothing is ever to benefit you as a consumer. Uh, Rewind that, note it down, rehear it. You really need to hear that part out. So, anyways, I got into options. That was just a horrible experience. Then when I had moved down to LA, man, after I transferred to my dream college over here in Fullerton, I started I met a guy who introduced me to Forex trading. Now, Forex trading was great. It's amazing. It's still something that I strongly recommend everybody to do. I mean, typically, if you have money, if you want more profit for the bang of your bucks, Forex is the way to go. And we'll talk more about that a little bit later. However, futures, I'm not a fan of futures. Again, we'll talk about that a little bit later, right? But I immediately, um, after I realized what I had in mind is that I always wanted to be affiliated with financial advisory, meaning I wanted to help people and advise people how to basically stay out of debt, how to basically manage your life, how to live below um, below reasonable means, how to live without feeling stressed, because life happens and everybody's fucked up. Hospital bill comes up, if something happens, God forbid, but funeral, or maybe you need to afford so and so surgery. People cannot afford it, and that's just something I just have noticed my whole life. So, anyways, um, at work for the last 4 years out of 5, right? So, out of the last 4 years, I've been working with Nasdaq complication, because, as you know, Nasdaq is a complication stock, an index in other words. So I just feel like Nasdaq is something that I immediately just figured out a certain strategy. It took a lot of time, and I feel like a lot of people only like YM or US 30, referring back to the Forex industry aspect of things. A lot of people like US 30 because of the volume. A lot of people like US 30 because of the massive candles. But that's exactly what could fuck you up. So you want something stable. You want something that can give you time to react. You got to know yourself. You got to breathe. You have to be able to breathe no matter what. Rather, through a stress situation, or rather, it's a very, I know people panic left and right, and then they only want to make themselves into a situation that could be extremely fatal for them, for the mental health as well. So you have to take it back, breathe, guys. So I had my internship as a financial advisor. Actually, I was shadowing somebody, and just 3 days in, I realized it was extremely just chaotic. The amount of people who trap themselves in relationships and debts. Some people even stay in relationships and are forced to stay in relationships. I mean, this goes also for my parents, but it's because of financial debt. It's because of income. It's because of, again, debt. Debt is actually what is the glue for most families. And I mean, people don't like so and so, but they come back swallowing everything and acting all apologetic just for the sake of forgiveness, because they're tired of heavy debt. Right? So I honestly, it was just really, really painful. I remember, I mean, we were working for a financial crisis company, and we would have a hotline where people would talk. I'm sure you guys know, if you know about financial crisis hotlines, you just watch a YouTube video. People would literally have metal or knife tapping on the counter when they make these calls, and you're telling them. A lot of people think they want help, but not that they need help. And it's those people who absolutely are hanging on to their dear life with a knife tapping or some type of metal tapping on the counter. And that's just when we have to also file things to 911 and press, as just general inquiry for their health, for the safety. So, anyways, that was very, very stressful. I mean, I'm still traumatized from that type of pain and mental stress. Trading itself, though, it's much, in terms of mental stress, it's a lot easier. It's a lot less stress. However, it causes more anxiety, even though if it's just for the duration of the time trading, right? So in plus trading, you can literally be done within just half an hour to 45 minutes, which is typically all I spend on a day trading. So, I just think this is so much better. Not to mention that the profits, the income, in literally just 10 minutes of trading, you can easily make whatever amount that your heart desires. Of course, you just have to see the rules. I mean, literally, the market opens at 6:30 a.m. and this was just 2 minutes afterwards, right? So as you can see over here, I got in. I got in at 23, so 6:23. It was a 9-minute trade at best, and I just stacked multiple positions. Actually, it was two more positions as she had retraced, and it just came for a final flush. So again, I know how to trade, guys. I know how to trade. If you're watching this video and if you're gonna stay through it, just don't watch it once. Watch a few times. Put it on repeat. Break it down. Give yourself a breather. Write some things down on a notepad or on your notes app or whatever, and just bear with me. And I promise this is gonna be an amazing video. So, let's go on to the next. I mean, I feel like I broke everything down over here on my identity, why I love trading. Also, why I'm doing this for free is because I just told you guys, I got into the finance major of things and degree in hopes of want to help people, but rather than wanting to advise people, where you can't really help them. You can't. But I could try to help people how to trade, how to try to better them, right? Try to improve people's weak links in terms of trading. And honestly, I find a lot more content in making these YouTube videos, especially if it's just one individual who texts me under YouTube or Discord in direct messages saying, "Thank you, bro. You don't know how much I need that." Or maybe they're saying something like, "I can finally see so and so. It's helping me so much better." And it really, man, it shines my day up. It really makes me so happy. I am a kind soul above all. I still imagine myself if I was unprofitable, and I remember I used to binge watch every videos, would hardly sleep for the first 2.5 years. Even though I got an amazing strategy from the start, but still how I implement it, how I use it, what are the rules about it, extremely, just a lot of stress. So I still try to make my YouTube videos in terms of what did I need and what would help me when I was in that situation. So that's exactly why I'm making these videos. I know how much I just died and I needed people's trading recaps when they would make 150K, right? So from $100 to 100K, all the difference is, and this is good news, all the biggest difference is lot sizing, right? I know this says 99 lots. This is not 99 lots. I'm using what is it called? An EA. It's a bot. Really, this was like $4,000. I don't remember the exact number, but it was $4,000 per point. And then at one point I had stacked two positions, so it was like $16,000 per point. I know. Insane. I live a good life. I eat steaks for breakfast and desserts. Trust, I live a good life. But it's stress just for the few minutes of each day, Monday through Friday. But if you can muster the guts, do this shit just for no more than 15 minutes a day, you got it, right? So 15 minutes of sacrifice a day rather than sacrificing 8 to 10 hours plus you got to deal with bullshit people. It's you got to weigh your scale. So what is day trading? Day trading, it's like investments. I mean, yes, I'm an investment officer. However, unlike investments, day trading is very, very short term. Typically, and people don't understand this, you don't need as much analysis. You don't need the 1 hour. 1 hour time frame actually does help and gives you good guidance. However, unless if you're trying to hold a position for more than like 30 to 45 minutes, then you don't need those big time frames. Some people just don't understand that, right? So people try to make courses. I'm still a student. I'm still trying to figure out what do the average consumer trader needs. What helps other people. I'm always trying to learn myself, and the hard truth is that a lot of people just spit bullshit left and right. You don't need to look at that hourly 4 time frame. I mean, unless if you're trading commodities, Forex pairs, that stuff is great, but specifically NAS, US 30, and S&P 500, which are all, yes, CFDs / indices, and we'll talk about that too. But it's you don't need the big time frames unless if you're doing swings trading. Now, I'm not here to tell you anything or teach you guys about swing trading because I'm a day trader. I day trade. I don't swing trade. Swing trade means you're holding positions for a lengthy amount of time. So, Futures of Forex, these contracts are temporary, meaning they can expire in an hour or 2 hours at the most, and typically you would have a higher amount of, you would have less of a commission, depending. I think that's more of futures and options side, because that's definitely, don't have to worry about time in Forex. So, look, the only caveat to, well, it doesn't matter, even investments, but there's something that's called liquidity. Now, liquidity is basically the banks making their moves. Banks, when they enter and when they exit, you'll see it. You'll notice it. Now, a lot of people will be like, "Oh my God, what is Nas doing? She's just flying, or she took me out. She took out me, and now she's going and hit my TP." Yeah, that's when banks got in, bro. Banks can see everything, and I'm saying this as I work. For the last 4 years, I've been working for a Federal Reserve. In other words, for the bank. So I worked at 3 different banks now. Sucks, but just liquidity is business for them. And I hate to be that asshole, but if you don't know how to trade, you're probably giving your money to people like me who are easily making $50, $60, $90 an hour and plus. Right? So anyways, let's talk about it. Futures and Forex, that's really just the 2 main industries for day trading. Yes, you also have options trading. However, NQ, NAS 100, though volume wise, price wise, they're slightly different. They're very, very similar, and price action is very similar. So I'm getting a little stumbled by how I phrased it. In other words, I'm just trying to say options trading, futures, and Forex, what they share basically is the same momentum, the same analysis from the same charts. It's just the charts for all, if you look at the charts for all 3 of them, they're all different. Even for work, I was trading NASDAQ with a Q, and I would look at basically the Forex chart, and I would always look at my trading view chart on, NAS 100, basically this chart right here, and I could show you guys. This chart, I would always look at this chart, which is my favorite chart, even though I like using Trader 2 sometimes. So I have, this is US 30 Dow Jones, and then this is NAS 100. I always would look at these charts for work and for everything, just because it's continuous. So Forex charts are continuous, and they show liquidity. They show true to exact liquidity, unlike Forex brokers. Now, Forex, I don't want to get too ahead of myself. I want to follow this, but futures contains basically breakouts, and there's something that people don't understand, is that futures is primarily followed with an agenda of having prop firms for the sake of kind of increasing the expenses for consumers. So meaning, a lot of people don't understand this, but basically MT4 is now illegal, because that was really like the right hand of Forex. That was like the big motivation for Forex trading for literally every year except of last year, right? Last summer, I think that's when they made the change. But here's the thing, in Forex, you have leverage, which is basically 1 to 500. I think that's the next one. There's a lot of leverage. Again, you guys can see this. CFDs, in other words, what's an index? CFDs, it's contracts for differences, meaning you could take sells. So a lot of people don't understand this, especially futures. Futures is literally nothing but just a followed group. They're just the herd. They're the herd of cows. They follow everybody, right? That's typically very common. That's a very common IQ for futures trading. You don't really see a futures trader on a live account trading with their own capital account. I mean, some big names like TJR. There's this guy named Ivo. It's IVO. He traded prop firms for so long. Same with TJR. But then, and they have all these affiliation links for prop firms, and I'm not going to get into what their affiliation link looks like. However, you should think about that. That's just not the point of this video or the intent of here. But when they're trading their live account, they hop onto Forex brokers. Just think about that. So again, Forex brokers 1 to 500 leverage, whereas futures it's 1 to 200 leverage. So meaning for every $1 you put in, the broker will match each dollar of yours with $200 for each and every $1 that you put in. That's not enough. That's nothing like 1 to 500 leverage. So guys, you have to understand, the higher the leverage, that means less, the less of your own money that you're using and the more brokers money you're using, right? So for example, 1 to 500 leverage, I could literally get started with $1 per point with the minimal lot size for $51-$52. With future, with a 1 to 200 ratio of a leverage, really, I would need at least 150, 174, yeah, 176 dollars to take just the bare minimum lot size. And again, these two minimum lot size trades are absolutely with no margin left, meaning if you get 1 point in drawdown, you are already in the red and your broker may shut you out, right, at any given second if the trade goes furthermore in drawdown. So there's book A, there's book B trading. After talking about that, majority of the prop firms are followed by book B trading. Now, book A trading, which is Forex, and it's also CFDs. In other words, this is just gonna slap everybody in the face. Book A basically means that money trades are being handled through a third party for the sake of it's a liquidity provider. Now, the liquidity provider is a third party provider for your affiliated broker or prop firm, just to give you the exact liquidity and the exact price and the exact movement. So there's a share of commission that goes to your broker and it goes to a liquidity provider. Book B basically meaning so another advantage of book A trading, it means that your broker, whoever you're with, they don't get all that money. You win or you lose, that money does not affect them. A lot of people are like, because I am, now affiliated with my own broker. So many people are like, well, if you're not charging us money, if you're not charging us massive commissions and shit like that, and if you don't have a monthly fee, how are you gonna make money? Because I'm book A, motherfucker. I'm building my broker around book A trading. There's not much profit to be made. It's more for the traders, to let traders do their thing. I don't give a fuck about that type of profits or money. I don't. Make my own money from my own trading. Now, book B trading would be basically the money goes to the broker because they don't have a legitimate third-party liquidity provider. Now, they typically try to act like they're certified according to the country of United States of America. They act all fancy and shit like this. And they try to say that, there's so many restrictions, so rest assured, your money is safe, this and that. But their liquidity provider is not exact because they hardly even have an exact liquidity provider to be just transparent. What that means is that when you take a loss, the broker takes in and rakes in all that money. It's actually more concerning of the establishment in terms of how your trades are being filled and how your trades are being managed behind basically closed doors. So once once you activate a trade, once you're in a trade, basically what is happening to that money and what's happening on the charts. And the charts for futures, and especially happens with prop firms, in other words, outages and all that stuff. And you guys, we're in beautiful, amazing times with prop firms right now. Please peep what's happening to prop firms. I mean, MFFU and Lucid. Lucid is actually an amazing fucking prop firm. I legitimately want to support Lucid until what just happened this morning. Apparently they went down, which is really weird because they're from legitimate traders who live in Dubai. So I know one of the persons or one of the people. It's one of their wife. She has an amazing story and she's a great trader. It just doesn't get any more legitimate and realer than that. Now, thing though is that when there's outages, they make money. That's book B trading. You can't. Yeah, they're gonna come up and be like, "Oh, I'm so sorry. It was an outage. We are completely unaware." And they may issue this and that. I mean, that's from a business standpoint. When they issue, basically clientele services, you can easily write that off. Especially when it's in bulk orders. That's a massive tax write-off. So. I remember, anyways, that's completely out of the point. So, it makes sense why they basically try to prohibit Forex trading or CFD trading in the United States of America, because with more and higher leverage in futures, basically you can't afford to live trade. So you have to take uh, advantage of buying an eval. Then you need to fund it. I mean, guys, I'm not even trying to make fun. Love this friend, but she's doing really well. She's actually a great trader. But here's the thing: it's that you just look at the dashboard. This is MFFU. Look at this. Look at, she's doing really well. Requested amount must be above at least 250. Minimum withdrawal amount passed. Eligible for payout requirements. Requirements for everything. Must have 5 days with at least $100 profits. Oh, which she did. 2 of 2 requirements met. Look how much pressure there is on the trader, right? Trading growth curve. I mean, yes, they have all the statistics, which is honestly and from my heart, hands down, complimentary, because it gives you a really precise and detailed type of statistics for your style of trading. It's just, to be brutally honest, it's also another means of adding stress onto one's mental health, right? So now when you see all these type of things, and I'm saying this while having, what is it? It's 4 monitors by 3 to the side. So I have 4 top, 3 to the side. What is that? That's 12 monitors. 12 monitors, 2 TVs, and basically the biggest screen on my desk shows me all my statistics. So there's 17 statistics per trade, according to, there's just numbers and questions and inquiries for every little thing of each trade. So that's where the stress comes from. So we want to try to make this less stressful, right? We want to really make this less stressful. Truth to be told, these type of things will always get you into your head. It will always force you to get in your feelings. So in other words, less is more. You don't really want to see these type of things, I promise. And they put all these type of things in your portal before you can even open it. Affiliates, billing, accounts, certificate. People get wiener hard when they see certificate. Remember, I just had a conversation with one of my friends in Discord. He's saying, that he's profitable, and he just showed me a certificate of being funded, but I don't really know if he got paid out or not. But what does a funded certificate mean to me? I mean, am I supposed to get wiener hard and jerk myself off, take my pants down, and just pull over to the side of a road, go to the gas station, use the restroom just to jerk myself off? I just got funded, bro. I just got funded. No, bro, it means nothing. Being profitable means being consistent, and all that stuff means you can really use being consistent and being profitable when you can afford your rent or your mortgage or your share of expenses in so-and-so household, right? So live your life like it's a job. And if you can really spend that type of money, it doesn't matter. We're not talking about amounts. It doesn't have to be amounts. So many people say if you make 5, 10, 15,000 a month, or even a week, or even if you make 20,000 a day, yeah, you're profitable by definition, bro. No, please don't make it that hard, right? Let's make it a little bit simple. Trading is very simple. It's complicated because it comes through the words, the mouths of millions before it even reaches you. So you don't need to make it this complicated. If you can afford, if your living expenses are only $500 a month and you're making 600, you're profitable, bro. Please understand that you're profitable. So we talk about book A, we talk about book B trading. Prop firms at the end of the day is nothing much more than a business. If you have an attorney and if you just ask for the tax documentations of so and so prop firms, you can easily see how they have a lot more, actually have millions of dollars that they're writing off just because of how many people literally argue for refunds and credit file backs, and how many accounts that they try to give back due to outages. So they take in profit and then they also give money away and then they write it off. It's just absurd. So live accounts, you don't have to worry about none of this, bro. Hop into the broker, log in. I use MT4. You could use MT5. Some people say it's shitty. It is shitty. It's very retro, very old school. But you know what? It works, man. It works. That's all that matters. It works. It's true to the liquidity provider, and it makes me my fucking money. Okay? So that's all that matters. And not to mention, when you also, it's this one, when you also have more leverage, this my broker is gonna have a 1 to 750 leverage. What that means is that you can literally make $40-50 from a slight deposit of probably $43-47. When you understand that, man, you have a lot more freedom because each dollar holds more value, and what that allows is growth, capital growth, positive equity growth, right? So again, you use Forex Factory. Just check the news, and you have to do this, man, before you trade, before you hop onto the charts. Always, and I still do this for the last 9 years. Hop onto the damn charts. See if if there's a Federal Reserve chairman speaking, because that's gonna either kill or drastically manipulate the market price action for the day. Or if the president, the orange man himself, is speaking, you don't want to be trading. I remember his wife, Melania, had pressed the button for New York market opening, and she was just there to promote her documentary. And the markets, even Nas, US 30 went flying like 200-300 points in a second. So many people lost their accounts. And what could you do? And then as for Nas, that shit had just tanked in the middle of nowhere, 107 points. I should not say in the middle of nowhere, because everything is calculated. That's if you're just saying price action is bad, or Nas is fucking around, or it's bullshit days. Look, I'm here to tell you, as a member of the Federal Reserve, we calculate this on our end. It's nothing but just math equations back to back to back, and it's all algorithm based on our computers in our calculations, right? So sometimes calculations are off, and then you're basically just gonna have either an early basically TP when you're expecting price action to reach a certain level, and it shies, it tips away from it. It's actually a great common mistake from the Federal Reserve, the market makers, NYSE, in other words. And it's really bullshit to notice it, because you kind of notice it, and then so many times you're like, I just missed my move. So many times when I want to see it bouncing off of support, and she's 10-15 points north of hitting my support, but then she shoots off. Yes, it happens. Some people are just lousy and lazy, and they're fucking around on the job, and they made a mistake, and it shows. That's exactly what it shows. All right, that's how it shows. So you guys have to understand, if you want to grow an account, if you want to trade, if you want to be a profitable day trader, if you want to trade legit, it starts off with Forex, to be brutally honest. Prop firms, it's not meant here for you guys to grow. Prop firm trading for me, I was just talking to this about my friends earlier in my Discord. It just sucks. I see basically 30-40-year-old traders on Apex, and we're gonna come across one of them as well later in this presentation. Literally, he curses every prop firm trader. Every other prop firm that people trade. He trades every Forex traders, because he's like, Forex is fake, this and that. Yeah, okay, Forex can be manipulated. I get that, but it's not heavily manipulated as the US and federally what is controlling of futures. US and UK control the futures, prop firms and brokers. There's a lot of manipulations in that, guys. You guys have to understand, anything that the US is involved in, it's scary. They want to, US currently, the president wants to control, not control, but he wants to make transactions on Bitcoin. It's because you can't control Bitcoin. What's that money gonna be spent on? Where is it gonna go? You can't track that. So you guys have to think about that. You guys, futures has been heavily pushed with an agenda from the US, just to push some things as illegal, and it kind of should make you really sit there and wonder, why is this being heavily pushed? And not to mention, most of these big future names, right, in the future industry, they're not there making massive payouts. Yeah, they show a withdrawal. I can fucking show a withdrawal right now too. Is it gonna be true? It's not gonna be a true withdrawal. I can fake that shit. Just like how anybody can fake that shit. A lot of future traders even show their fucking bank statements, but how many of them have actually been caught faking their bank statements? Here's a funny one too, and you tell me this: how do people say that they're making 60, 90, 100, 200k a week, a month, but then they get denied of a credit card? Homie, credit cards, yes, it's dependent on your credit score, and credit score is also determined by your taxes and how much income to debt you make. You need to have a positive ratio on the market. If it's negative, you're gonna get declined, and this shit unfolds on everybody's social media on Instagram just within the past week. Everything's fake, but there's numbers and there's papers and there's screenshots all online just to promote their affiliate code to make you want to be the biggest consumer, and for them, business, profit, money. So please understand that, because at the end of the day, futures is just, from every aspect, from even the consumers using futures, it's nothing but business. So let's get started to the next one. We talked about how, Forex and futures, they're primarily similar, but there are some differences. So Forex brokers make their money because of spreads. It's not buy and sell, it's bids and ask. So some people may say that, they may argue that there's delayed entries and exits. You press buy right now or bid right now, and then you get filled basically 2 points on top, or 2 points late, 3 points late, and in best case scenario, that's just the average spread. If you're trading basically between sessions, spreads can be as much as like 10 to 15, sometimes even 30 points. And next thing you know, you just get fucked. Literally the space of the spread can literally just hit you in max drawdown. And next thing you know, your broker closes you out of the trade. So that's why you want to, and we'll talk about this later, you want to have proper risk management. But to be brutally honest, you're always going to have a delayed entry and exits, even from what I've seen with my friends who trade futures. It's very common on prop firms too, because you never really get exactly filled right then and there. Although I will give the hat to futures on that one, that you do, and you can get better entries, you can get better exits. It's just with the volume literally being controlled from every millisecond, you're never gonna get the exact entry or the exact price, right? It sucks, I know. So brokers with Forex, again, you look at this. Forex brokers and their charts are fluid. It's liquidity. It's liquid, and it's liquidity. It shows you everything. You cannot see that top wick and basically these bottom bodies basically right there, top of this wick. You cannot see it on future brokers. Now let's go back. I'm getting text messages. Now you can't really see that on future brokers. Again, we talked about it. Forex allows CFD. In other words, it allows for a lot higher margin. That's why CFD is federally illegal in the United States of America. A lot of people would say, well, Forex brokers are not regulated. They are regulated. You just don't understand, and you don't read the FAQ, frequently asked questions. You have to read the FAQ of so-and-so broker, because yes, if you're not reading all the terms and reading the FAQ, you're definitely putting your trust and money or judging somebody just by the damn cover, right? Which by all means kind of deserves the dumbass award of the year, right? So look, these brokers, offshore brokers, yes, for Forex, they have to be offshore to allow higher leverage, because the United States of America wants everything to be expensive. Just like, that's not a brainer here, guys. Just like from groceries to gas, everything in the United States of America, even education, it's going to be expensive. It's going to be the United States of America is never consumer friendly. They're pro-business. In other words, pro-scammer than business, right? So, sure, more leverage means more capital, less of your own individual money is required. We talked about that. Charts are proportional. Again, they're fluid. What I mean by that is that they're precise, because they have a legitimate liquidity provider. What I know, I already mentioned the term a few times, but what a liquidity provider means, basically, they're a licensed firm that handles the charting and the price movements. So futures, they can boast that, but they try to fulfill that on the back end by within their own support and development team. So, you compare delayed entries and exits, which though are very accurate and true, to basically having one that doesn't even have their own liquidity provider, which should really make you wonder. Now, why do prop firms not have true? I think it's called ISP. Why do they not have their true ISP, a liquidity provider? So, but Forex and every offshore broker, yes, they're unregulated according to the regulations of the United States of America, because of they allow CFDs and they allow a higher margin. That's why they're unregulated. According to our country, they're not as regulated. That's all it means. They're not unregulated. I've been with 8 different offshore brokers, and I have never lost a single cent aside from losing my own trades. I have never been scammed. I've actually been scammed of a U.S. broker, and I've lost a shit ton of money and got my credit hit because of a fucking U.S. broker. Never the other way around with an offshore broker. Never. So, futures though, they don't have broker spreads, but man, you need fucking thousands of dollars just to make $100. So you need a shit ton of capital, right? Capital means your own money. You don't need that with Forex. I believe though, and anybody could quote me wrong, quote me otherwise. Don't trust me word for word on this part. Futures, I believe in order to be profitable, for them to make money one way or the other, for their development team, they need to be making money one way or the other. And I believe it's because the commissions per trade are somewhat on the heavier side. I mean, how it goes from basically few cents of commission per trade, regardless of how much you make or lose, to basically being a few dollars per trade, right? So, and then when you request a payout, it's like a 70 to 30, 60 to 40, 90 to 10 profit split. I mean, these guys are as greedy as it gets when it comes to futures trading. So we talked about how leverage is capped at 1 to 200 with future brokers and prop firms. Prop firms above all should be much higher than 1 to 200, by the way. So this is why they offer the base minimum they allow for prop firm trading is it's a 20K trading account. Is because anything with futures, anything less than say 10 to 15K trading, it's just bullshit. You won't really make it far. You can, with a 10 to 15K account in futures, you can probably make no more than $1,000. With Forex, with 10,000, I know for $23,000, I can take 0.90 lots, which is $90 per point, and I can easily make basically $35,000 to $4,000. So. Just easily within just a snap, just like that. Could probably do that right now. Probably could do that tomorrow. So at New York opening. So charts. Look, we already expressed this. Now you look at Trading View. You look at basically I don't know what's the liquidity provider for these guys. I think it's called CM. Whatever they use, but that's not an exact ISP. And manipulated. In other words, let's just take a look at this. If we go over here, let's talk about futures. Oh, CMC, right? So let's just look at this. What is it called for you guys? NQ. Let's look at this. So, one for one. Literally look at this. I'm gonna put a line there. Look at that. So again, top wick, it's above the zone. It's not even accurate. Yes, you have double bottoms there, but these lines are above those 2 wicks are above this line. So you can't really say that these charts are precise compared to these charts. See? Double bottom, wick, double bottom, bounced up. Top of the wick, body tops. Let's see this. Double body tops. Can we see that over here? Oh no, it's higher. See, this is what having a true liquidity provider means. It changes your quality of your charts, and that directly and proportionately affects your trading, guys. Your ability to see what trading can do. I'm gonna be brutally honest. I would not be able to survive off of charting, right? With this. So what's crazy is that I had an amazing. I'm gonna just clear this out. I had an amazing trade yesterday because I wanted to basically bottom wicket, and I saw that we could easily keep an eye on this double top plus that wick. I easily saw that we can double top over there. Came sure wick down here showing that weakness over here, wicks on the top showing weakness over there. We basically came up, rejected triple. All these gaps are called imbalances. All right, so this is a remake of the second half of the first episode of the mentorship. What's fucked up is that we were literally talking about the best stuff, which is the charts between Forex and futures. Now they both, of course, with Forex, it's usually called either US 100 or NAS 100. This is strictly with Nasdaq, this Forex side of things. And futures they call it NQ, or I think they just strictly just call it NQ, right? So look, futures again, I'm sure I watched a replay of the first half of the video I'm gonna use and mix with this one. So sorry if there's a difference in quality, difference in audio, because this is my second new MacBook. Just returned and refunded the M4 Air to the M4 Max Pro. So, yeah, it's almost like $6,000 in 1 week, basically on two laptops, or more like a refund, and then I fully maxed out this one. So it's dope. It's cool. Sometimes though, money can't buy everything. But anyways, we talked about all this stuff, right? So I'm not gonna go over it again. A lot of people though are confused on SFD. It's because they allow leverage, they allow hedging, and in the US, hedging, in other words, for those who don't know, since this is a beginner edition of the course, hedging means taking buys and sells and having both of those trades, which are contradictory of each other, right? You take a buy if you want to see it buy, you don't hold a buy, and then the next thing you know, take a sell, while you have both buy and sell positions open at the same timing, right? So even if you take a buy a few minutes ago and you take a sell now, but your buy is still open, it does not make a difference. You cannot have both a buy and a sell contradictory positions open at the same given time. So that's CFD, in other words. Futures is basically the US version of trading, day trading. You can't allow that. You can't allow CFD. You can't allow hedging, in other words. No broker and prop firm. I think in prop firms, if you hedge on a funded, you immediately get suspended. But if you hedge in an eval, then you immediately just lose or blow that account. There's no two ways about it. So you have to immediately close. Let's say if you have a change in bias, you have to immediately close your current positions to take, if you took a buy, let's say you're in a buy and you're like, no, she's gonna dump right now, then you have to close the buy just so you can take that sell. So you can't have that in futures. I can't have that in the US. That is illegal, extremely illegal in the United States of America. So I could even get fired on the spot if I even do that at my company. So we already talked about all this. Again, we're going to talk about charts. I know exactly where we left off. I got my charts, my trading view ready. Talked about all this. Again, we talked about book A and book B motivation. Futures book B motivated because, again, they don't really have an ISP or a liquidity provider. What liquidity providers mean is that basically they're the ones that provide that so and so broker or prop firm with a with the data, right? With the order flows, with the data. When NAS is moving by the second, by the tick, that's data. That's typically provided by liquidity providers, right? So Forex and especially prop firms, they do cheap out on it, but to be fair, that's just your modern day of scamming. It's gonna be prop firms. If their data is not confirmed And of course, US is going to use this as a like a major card in their decks, right? Because they're going to always come at Forex traders and going to be like, they're going to be like, oh, your broker is not regulated, it's unregulated. Well, I think I talked about this earlier. Again, we're just trying to do a recap before I continue forward. My offshore, or majority of offshore brokers, I've been with 8 offshore brokers at the moment. I'm on my 8th one. I'm creating one, so that's going to be my ninth. That's going to be my ninth unregulated broker. They're regulated according to that island, according to that country. It's not that they have no regulations. They do. If you just look at the terms and the FAQs on that broker on their website, it says they're not regulated according to your country of origin. Whatever country that may be. For most of us, that's the United States of America. For some of us, that might be the UK. For some of us, that might be Australia. And Australia also has extremely, extremely strict regulations that some, even the US brokers and prop firms, do not meet according to Australia's regulations. So, legally, word for word, if you just flip the narrative here, to Australians, the US brokers are unregulated. Think about that. That's just some food for thought, okay? So, man, it's hot over here. And I get hyped up talking about these type of things. So Forex, to be honest, there's a lot of advantages, honestly. I mean, each one of these are damn near advantages. Another advantage is that since they're offshore brokers, who's gonna do your taxes? Your trading journal, and again, we'll talk about this a little bit later. It's literally, I mean, I might as well say it now, but the aspect and the whole point of having a journal, it's your diary to your accountant, to your CPA. So you get to make up basically, I mean, yeah, they're gonna match basically the withdrawals match. You can't fake the withdrawals aspect, but whether you take 100 losses and you made 3 massive wins, you will only be taxed on your withdrawals. I mean, that goes with both cases, but you can definitely, there's a lot of playing around space with when you're doing it yourself, right? With this, you get a 1099 or a W-2. I don't know which one it is, but technically, say even if you're an entrepreneur in a prop firm like Top Step, which only, as of last year, they only gave 1.9%. They only issued a W-2 or a 1099 form to 1.9% of all their clientele list. We're talking of almost, I think we're talking about almost 13, 14 million users, and only 1.9% of that got actually paid out more than basically $12,999, because in the United States of America, of course, Top Step is a US prop firm. At least I'm under the impression of that. So just to be completely brutally honest on that part, in the United States of America, if you do not make, even if you make a penny less than $12,999, $12,999, then you do not legally have to pay taxes because you do not make enough to pay taxes. That's a damn harsh truth. So think about it like that. I mean, I saw that there's 12 or 13 million. I hope I didn't get the number mixed up. 12, 13 million users or accounts bought, probably users, and only 1.9% of the users got paid out. So that, that's massive. That's a huge. I mean, and if I'm being honestly, I don't think the number's saturated. I think that number's extremely well below of how many users there actually are. Meaning, I don't think that. I think we could be talking about a lot closer to 100 million users. But you see, just prop firms is just business. Futures is business for everybody. Okay. So, again, we talked about leverage. Leverage is not your friend in futures. I mean, you don't honestly see any futures trader that's trading live, and they don't even have a proper futures broker. It's prop firms. It's majority prop firms. You have to think about that. Why is that the case? Why do Forex actually have brokers where you can put as much money as you desire, or maybe as you want to start off with little, but in futures, it's straight to prop firms? Say I'm wrong, okay. Say I'm uneducated on this part, okay, that's fine. But just think about it, right? why do even majority of the legit traders in the futures industry, why do they trade on Forex accounts like TJR? Like, again, I shouldn't say other names, but I mean, there's about three other people aside from TGR who have always traded prop firms, who have always traded futures industry, never Forex. But then all of a sudden now they're trading on Forex industries. They're trading off of a Forex broker like Hero FX, right? Like Henko Trade. Um, One of them is also trading off of CoinEx. That's actually why I switched to CoinEx, because then he kind of showed me that leverage is amazing. So let's just get to the charts where I had literally left off. What is this? Okay, so again, we had put a line over here, right? We had put a line over there, and we're just over here talking now. Again, look at this wick came up, body closed below this, and then look, we had wicked it again, literally so perfect. And then look, as soon as we came back up, wicked, wicked, wicked. Well, it was the wick did come a little bit below, but you did have a double bottom over here, and then push back up, and then look, double bottom plus a wick over here, and then of course we did come a little bit below, and then when she came back up, I think we can we erase it? She wanted to basically retest it. Yeah, the wick came again below, but then nonetheless she came back all the way up. Now if we just look on, I don't know why I'm getting that stupid message, pissing me off. If we look at that same thing, which would be that same level right there, not to mention, guys, look, this line goes on top of that, right? That line goes right below basically that bottom, goes on top of the double top of those candles. Look at CME. Look, the double top, I mean, the line is basically between those two candles, right? Look, I mean, this one actually wicked it perfectly in this case, but then look, you don't really have, even if you just zoom in a little bit more, look, I mean, there's a massive gap basically from 802 to 809. That's 7 points. Not massive, actually, I'm just exaggerating. 7 points before basically a double top came up to the line. I mean, you see this, right? It's not exact, it's not accurate. This is why in futures they have, if the charts aren't accurate, they have so many bullshit strategies, right? And I just also just want to show you guys some, just because this timing was literally perfect. Let's just hear it. It's literally perfect.
You're trading on a prop firm. Every time you win, you directly cost the prop firm money. That's why it's a blatant conflict of interest when a trading guru will teach you a strategy and simultaneously support a prop firm. They're double dipping by instilling false confidence in you that you're going to be able to turn a profit trading when they're teaching you some bullshit, while at the same time collecting a check from the prop firm when you lose. The reason you cost the prop firm money is because your trades aren't made in a real market. They're made in a simulated environment, so when you win big, your position isn't netted out by the prop. If you make money, they didn't make that money on a real trade in the real market to hedge that. That money's coming out of their pocket and they're giving it to you. It's in the prop firm's best interest for you to fail, and it's in your guru's best interest for you to fail. But evidently, they do a pretty good job keeping people on the hook by telling them that there are just problems with their trading psychology or their discipline.
Okay, so we talked about that. Um, we talked about that. Where was it? Where was it? Where was it? This one. I also want to go back, and after that video, what he talked about basically in the last few seconds, that basically when people tell you that you just blew an eval, blew a funded, or you fucked up, people will always blame it that it's your psychology, and then they put all these, I mean, this is the MFFU dashboard. Props and kudos to this one amazing person. She's a great trader, she really is. I just generally think futures trading hinders the true potential of so many traders, and that's why I'm doing this for free. This is why I'm actually stepping up, and this is why I'm having these type of classes, because not just to voice out and to kind of just let people know, like, hey, day trading is so much easier than you think. It's just, I can't belittle the stress and anxiety that goes behind trading. That's always going to be a legit thing, regardless of, look, I'm in my 9th year of day trade or trading as a whole. though in a fourth different market because I've tried penny stocks, tried options, I've tried traditional investments, which I used to do and still do from time to time, and then now day trading CFDs or Forex trading, in other words. It doesn't make a difference. Um, Even in my work, when we see there's like 13, 17 different statistics per trade, and it just shows you different aspects per trade. And when you kind of see different angles per trade, you kind of realize it honestly scares you more. It kind of makes you, it pushes you back on your chair with a little bit more stress in your chest, right? It gives you that heavy heart. And I just think day trading should not be anything worth of that caliber. I don't think you should be looking at all these statistics and be scared, right? I think a lot of people look at all these things, especially the picture down here. Um, they see, you know, maximum withdrawal amount passed. The amount must at least be 250. Once people get over 250, and everybody knows this. If you've been in this phase in a prop firm, or if you've been trading for quite a while, you know this. If you make so and so, everybody, the first thing in their mind is, how much money do I need to make today, tomorrow, to get a withdrawal? And the $1 million question: how much money do I want to see in my bank account? So not to mention that you have to request for a payout. You have to request as to take out money from your account. Now, so many people are like, "Oh, but it's not a big deal." Well, I kid you not. I could probably. I typically I've had so many cases, especially when I was in college, and I still do this from time to time when I want to buy a new car, when I want to, like right now, I wanted to get this MacBook. I literally made $1,000 this morning, and $1,028, and I literally just wanted to withdraw that money into my bank account, and I wanted to basically return my M4 MacBook Air to buy a fully binged out, fully maxed out M4 Max Pro, right? So, um, and I kid you not, I was done trading at 6. I literally just 3 minutes in, I was done trading, say 6:35. 7 o'clock, I issued that withdrawal. I worked out, uh, just 30 minutes cardio, took a shower. Withdrawal was still pending, of course. Actually, I mean, it had already gone to the support team. All they had to do was just verify it, and I already had put my Bitcoin address where I wanted to receive that the payout, right, the withdrawal. And next thing you know, as soon as I make it to the mall across my street, across my house, next thing you know, I already got the money. I straight up got a notification from U.S. Bank saying, "Hey, withdraw." Well, actually, it says things, but it said the amount that I had requested. I was just like literally just 2.5 hours, which of course is on the much longer side. I've had times where literally I needed the money as short as within like 35 to 40 minutes because my fuel light is on and I gotta drive 100 miles north to get home, and I have no option but to just sit roadside or sit at a local parking lot until I get the money hit. And next thing you know, she hits literally just within a few minutes as I'm still contemplating where to park my car or where to just sit down until I get that money in my bank account, right? So so many situations. Trust me, when you get older, if you're in dire financial situations, you need that shit like a snap. You need it. There's no two ways about it. You don't have time to wait. You shouldn't want to wait. If it's truly yours, it's yours, and you could own it, and you should own it right now. So that part would be enough to convince me, to be brutally honest. But I'm not here to convince none of you guys that Forex is better or worse than futures. It's just you guys just don't understand that they're both necessarily not really different industries. They're both very, very similar. It's just, it's kind of like taking different roads to the same destination, if you will, right? If you put on Apple Maps, Google Maps, it don't matter. They're still going to take you to the same place. Okay, say you use Apple Maps, because I hate Google Maps. Okay, but it's still going to give you the same alternatives to get to the same destination, correct? So many left, so many rights, and it still will lead you to the same destination. Just different ETA, just a different time arrival. That's about it, really. So with futures, I mean, it follows. It's truly hyped and followed by this false narrative, by just propaganda from the U.S. Right? I kid you not, literally Thursday morning after trading NY session, New York session, I literally got off and I hopped into this one guy's Discord. I was like, "Yo, what up?" And he was like, "Introduce yourself, this and that." He was a friend of a close friend from mine. He started his own server and he's been trading 7 years or since 2017. I don't remember which one he said. So maybe 2017, 7 years. Oh no, that's 9 years. That's the same time. Yeah, so he's been trading 7 years. I was 2 years in longer than he was. That's when I started, 2017. So, I started in 2016. Anyways, um, I was talking to him, introduced myself. I'm like, yeah, I'm a Forex trader because we never really, though we shook hands, we never really exposed each other. We never really revealed each other's identities and experience. We just knew that he's another day trader and let's have shots, right? Cheers. Another payouts, everybody getting paid out, everybody's doing well in their life. Cheers, cheers. Uh, kid you not, and we were in VC, and the motherfucker was, of course, he was on stage. He gave me the access to stage. Turned on my camera. He had his camera on, and dude literally just humiliated me in front of it was, I don't know, it was 40 plus people. Could be even as much as 60 people, or maybe plus still. He just literally just said, as soon as I told him I'm a forex trader, he literally said, "Oh, fuck no!" And then he muted me. He kicked me off of the stage, and he was like, "We don't ever trust forex traders, right?" Because, and then he was like, "Well, if you made money, then post it." So I posted my screenshot, of course, MT4, just traditional, old school, just the best way to go through it. MetaTrader, right? It allows CFD trading with high leverage. That's the way to go. If you want to make the best bang for your buck, CFD trading with high leverage. So the guy said, "No, this is fake. This is fake." And then he just threw a whole childish ass tantrum. And next thing you know, he ended up kicking me from the server. And I'm like, "Bro, I talked to our mutual friend. I'm like, this guy is not legit. He's trading on a prop firm, and I looked at his YouTube. I even did my due diligence, my research, and next thing I know, he loses 3 days of every week, like 300 on across 10 different XFAs. I'm like, dude, he loses $300 per 10 accounts. That's 30K, and he loses almost 100K every week. He's not damn profitable. He's probably just strongly affiliated with his with Alpha. That's what it is. He's extremely well affiliated, and he's getting. I mean, he doesn't have the best house. He doesn't even have the best. He has good cars actually, but everything. It's just he's basically not making profit from trading. That was very evident. Yeah, it's very very evident and easy to notice when somebody's a pro or when somebody's not good at something, right? So um that's that. I think we already talked about the charts. It's this clearly would not be the best situation. If we go back over here, if you look at support and resistance, literally this is the next candle would be 615 to 630, which would be the pre-market candle. Came down, came up, came down. We want to basically see it come up and hold somewhere over here, right? That's basically it. This is very very easy, guys. Very very easy. I promise you, it's very very easy. The only question is, we should be coming to retest it right there. Look to the left. That would be pretty evident because we came up, drop, retested, came down, pushed back up, right? So ideally, you want to say we're holding what was once support, but then you see all this. You see this candle should have came, and the double top should have been below this. But essentially came on top. You see that these bottoms should have been on top. The blue line, because this green candle should have wicked it to push back up. You see, it's just false. There's false. Let's see exactly where the 615 candle drops, because literally I had entered as soon as the next candle had formed, because it literally just was right here. And I'll show you. See that gap? It doesn't really give you that certainty. And you go to black bull charts. I actually think my favorite black bull charts is my number 2. I know sometimes I switch it like a bipolar kid, but honestly, Trader's the best one. Trader's the best. Trader is actually the best. It's the most easiest one to read because its ISP is literally luxury. It is a premium ISP, and this broker boasts about it because they are. If I'm not mistaken, it's actually Trader and is it indices? Trader and FXCM are actually using the same third-party ISP. These guys say they have a very lavish ISP, and this one says they have a premium and a rich ISP provider, or ISP means provider, liquidity provider. So, and every chart, every broker, which is fueled by different brokers. Black Bull's a broker, Trader's a broker, CME is a broker. Technically, word for word. I just think every of these charts, each one of these brokers, of course, they're gonna be lagging. They're not gonna have the best. They're not always gonna be 100% accurate. That's a damn fact. But I would rather lean to something that's more accurate, reliable. Of course, reliability, heavy on the reliability, and then go and base my judgment from that. So I would either tell you guys to look at US 100 from Black Bull charts, or US 100 with Tradu, or FXCM. That's another one too. I just personally just like Tradu, but it literally I've done my due diligence. FXCM and Tradu, and I've talked to both of their support teams, and they mentioned their ISP license. It's the same. It's the same. So that's how you know. With Black Bull charts, and if I just clear this out again, same thing, right? Came down, came up, came down, came up, came down. What do you want to see it do? Now, a lot of people will be like, especially Friday, a lot of people are like, Friday's a wild card. I want to see it go up. Oh my god. Oh my god. I called it, bro. I'm the market maker. I'm a Jew, bro. I just hate people like that. Don't be stupid. Don't talk like that, please. Right? That's one reason why I'm just genuinely just thinking of making mentorship and kind of just thinking of just disappearing from Discord. It honestly is pissing me off. So many immature traders. And next thing you know, they hop on a prop firm, they blow it. Or as soon as they get on a funded, first they funded, I blew everything. I fucked up. Now I'm back on an eval, which I have to renew it, rebuild. Probably sound like a hater top notch. But let's see what happens here, right? We already talked about it. It's going to come back up. Now, what we have to look at is basically to the left. So, that's actually not even the right time. There we go. Came down, came up. Came down, came up. Came down, came up, came down. So, this is going to be a lesson on this part. When people were like, well, it created higher highs. Actually, yes, but honestly, that kind of means a different thing as well. That actually I've kind of realized with my experience, it can really, really help determine basically how to expect if we could have a wide range. And I talked about that this morning in my Discord. I meant that basically we could have a really explosive trade when I mean wide range. And when you see a massive candle like that, it definitely means wide range. And then when you see the massive drop, yeah, you have a really wide range, right? You have a really, really wide range. So, came down, came up, came down, came up, came down, came up, came down, came up, came down. What do you want to see it do? Of course, I'm not gonna act like a nartard, say, oh, it's gonna come up, and start thinking of vagina. No, I want to see it come up just for a final come down. I want to see it just a nasty, nasty dump. Now, that's one part of the analysis, right? You look to the left, okay, we're going to be like, okay, so she's definitely going to come up for a retest at 6:15 to 6:30, or perhaps a New York market opening candle. We don't know that. We don't know timing. We don't ever base our analysis off of timing. We do not understand that. We do not. Timing is your enemy. You're not here to look at the time. You're here to look at the charts and to understand when to trade and when not to trade. So timing is not your friend. Timing is like death, like the Grim Reaper in this space. So we look at that space, and I'm going to tell you why, right? top over there, the bottom's here. Okay, and double tops there, and double tops there, and the wick, massive wick before we had a massive push up there. Okay, and double bottoms right here. Okay, came down, wicked it, came up, broke it. The wick, look at, I want to delete that so I can show you this green candle. Look at where it closed. Look at where the wick is. Wicks indicate where they try to go, but where it closes is exactly it's like revealing the truth. So if the candle closed below the blue line, what does that mean? We're holding something basically above that candle right here. Then you look over here, these wicks are basically saying that we're holding something down here. You see this, it came down, a wicked it just for a fucking push up. And that's how exactly you know that there's something over here, there's something over here. And then you see basically this candle wick, push up, came down, push up, right? So we want to see, let's take a look. Now she might wick it a little bit, just a point or two, and then she immediately just comes down, right? So pretty close, pretty good. I think that gap, which is literally 4 points of a gap, is much better. Of course, with the charts, they're a lot more evident, they're a lot clearer, they're a lot more transparent and revealing of a certain story rather than this, right? Basically, I think we might have the same amount of gap. Don't tell me that. 737 to 11. Oh, that's, yeah, see, that for sure would not allow me to trade because that would not give me enough confluence, right? So look, you basically take that same story. You cannot duplicate, I mean, you have to duplicate that same story because I just read you exactly what had happened on this chart. So but then if we're being honest with this, I mean, this might look more of an appropriate zone, but then see, it's just, it does not line up. Of course, so many future traders, and I get it, I'm not even disappointed that future traders do not understand support and resistance. I understand why future traders like my, that distant friend who kicked me out of his server was basically so just fucking salty because their charts honestly are not quality. It's not that of quality. It's not that, it does not allow for transparent day trading. It honestly, if we're talking about what makes things easier and what makes things harder, this is definitely on the first top two things that makes trading hard for me. And you guys should be able to tell. I'm just here to keep it straight a buck. I have two US 100 charts, two NAS 100 charts. Should show you basically how much charts, the importance of charting means to me, right? Should emphasize basically how much I want to look at accuracy and how much I try to focus on being perfect. And it starts with charting, right? It starts with charting. So this is why, and we just talked about this one video.
You're trading on a prop firm every time.
We just talked about this video where, and I showed you guys, your trading guru wants you to lose because you look at TJR. Again, you look at so many other people who, yes, they might have a Lambo, but then when they apply for credit cards, they don't get accepted. How does that work? They show their bank statements, but here's the thing. If you guys know that Weiner, I think his name is Jeremy Weiner or Johnny Weiner, whatever, he literally just got exposed this morning. Actually, you know what? Since we're talking about it and you guys are listening to me, I want to be accurate. Let me find this, guys. Let me find this guy's thing because I really want to make sure I'm being transparent since we talk about it. So I want you guys to hear this. Oh, it's right Justin.
Now, and props to him. He's finally coming clean. I didn't know that he was unprofitable or break even, but to avoid this, make sure you.
So his name is Justin Werlane, And not this guy, just a different guy. And basically, he came out clean this morning, and he kind of snitched himself. I don't know how. I have yet to look at the recording, but Justin Werlin was basically showing just a lavish lifestyle, boasting about it. I mean, guys, if you're making in life, and I hope we're talking man to man here. I hope we're talking as BFFs here. I hope I'm talking to you as a brother, as an uncle as well. I guess I'm following, even though I'm 25, I guess I'm following an unk status now. So whatever and however you look at me, I hope as a dear friend and eye to eye, you know, I'm telling you, do not be an asshole when you make it in life. Because how you at your peak, how you treat people at your peak is how you're also gonna get treated. And I can humbly say that have I shake the hand regardless of the amount that's in their wallets, and it honestly does bring me a huge amount of respect to have people with money less than me who love and who literally will just dire to just pay for my drinks, ask me out, and they want to pay for my menu, for my dinner, for my drinks. And you know, that's how you earn respect of people, right? When you want to basically sit on the same table, you don't take them for gratitude, you step up, you know, be a man, own up. That's what having a beautiful life is all about, just owning up to yourself. So again, why I showed this video and why I brought up Justin Werlane, if that's how you say his name, it's because a lot of these future traders, like that one distant friend who I just got kicked out of his server last week, last Friday, last Thursday, whatever. They create all these bullshit strategies. ICT. You look at all these trading styles. We do not trade ICT at the Federal Reserve, by the way. Sad news, boo-hoo, nigga. I could care less. But we do not trade. We really, and I think we talked about it, unless if that's the next one. Oh, yeah. We don't really use, and I'm being humble when I say 94% of all investors. So again, I've worked at 3 banks and 2 retirement systems in the state of California. Yeah, so that's 5. That is right. Yeah, 3 of them were banks. Yeah. So I worked at 3 Federal Reserves and 2 retirement pension companies, government companies, and really, and I'm being humble when I say 94%, because I genuinely think it's as much as 97 to 98%. Use primarily just 3 strategies, which is standard deviation, support and resistance, supply and demand, right? So even though support and resistance and supply and demand really go hand in hand, a lot of people can argue I even trade supply and demand because I understand where price wants to come, because I understand liquidity. And then a lot of people will be like, liquidity is ICT. Well, when you have bullshit charts like this, bro, when you see that, of course you're gonna say it's some type of bullshit liquidity to fake you, to Jew you out, and you're gonna get on all pissy mood. But that's just not true. That's just not true. We know that there's support down here, because the double top of that, basically the bottoms, it's not evident on your chart because your chart's a piece of shit. We go over to this chart. You could see this chart a lot clearer, right? A lot cleaner. It's a lot more fluid. You basically put right there. It's exact. Of course, you know, a little bit. It's every chart's gonna be off here and there. But then you look to the left and you're like, wow, double top. Oh, wow, wick. Wow, another wick. Wow, wick again. Wow, double bottoms, right? It just gets to the point. It's like, come on, guys, we're really talking about this, but you can't understand none of this if you look on this bullshit chart. Sure, in some aspects it can be kind of worthy. It's not 100% shitty, to be brutally honest. I think this chart is just so much better. This chart as well, Tradu. Again, you can't go wrong with Black Bull or Tradu. A student was actually talking to me about it today and this morning, and he was just like, you know, how do I know, right? This and that. So every chart is gonna be kind of fucked up. I mean, even Tradu, as much as I love this chart, look, it's basically just almost the same as what's the CME, right? So You really have to use a little bit more context clues in this case, I think, but I still stand by trade with charts. I still think black bolt charts honestly is just the best. Um, Again, I use trade with charts majority of the time. Sometimes I just confirm it with black bolt charts. Uh, Anyways, moving on. So a lot of people, again, just finishing up this one, the slide. A lot of future traders, also future traders in general, like by far, the huge comparison is that future traders just offer a lot more courses. If we're determining population by per capita, um, you would have a lot more of basically courses, affiliations, with the futures industry, just less trading, more money through and by other means. So people, all these people that you're buying your courses to, all these people that you look up to, because you're new, and I don't blame you. You're new, you want to learn from somebody who makes all this money. I get it, 100% do. I've been there myself. I get it, and this is why I like lurking around from server to server, seeing how people talk about trading, because honestly majority of it's just fake, it's false. Day trading is not that, it's this. That's the type of comment I hear from every server, and of course you're gonna hear that from my server too, because I work for the Federal Reserve. I do this for the company and I do it for myself, right? So, I do this because I can eventually retire sometime soon, right? So compared to other people, they're like, have to buy a Lambo, have to, then they use it for a great marketing tool. It's great for a marketing tool, but please be honest, it's just not transparent. So that's where the futures industry lies. Honestly, Forex, you have a lot of people using fake accounts too. It is kind of what it is. You can't really escape scammers from either industry. I just feel like one industry has extremely significantly more, but they offer you and they teach you basically a bullshit strategy which holds no truth. So, and then the Justin Werlane guy, he also was faking his bank statements. I mean, he's been doing it for almost 5 6 years, guys. 5 years or something like that. He was kind of. I mean, I heard his name when I was still trying to learn how to options trade. So when I was still in a demo with options. So yeah, that's he came from a long time just to show up as not even a profitable trader. That sucks. But he wasted his own time, whatever. Of course, though, he's been making good money, and of course, he's probably sitting in a shit ton of debt because of how fake he is. So, future traders, fuck the fake ones. A lot of people want to be trading basically New York opening right then and there, right on the second of 6:30 a.m. PST. That's New York opening time in the West Coast. All I could say is that Federal Reserves banks, they do something that we call bank sweeps. Basically, that means, I know to a lot of people, they don't think that, they always question, bro, why did I just get liquidated for my $100, or for my last $200, or for my last $74 if you're into the Forex side trading CFDs. It's simple. There's millions, honestly, there's billions of traders. Your $74, it's not $74 for us. It's every trader that was trading at the same time as you, and most likely that's few $100 million. So that's a little behind the scene with a cherry on top for you guys. So you want to, but I typically say, as a general reminder, you want to stay within the first 45 minutes of trading. Now, I typically like to say 15 minutes pre-market from 15 minutes after. That's honestly the best time, just the 30 minutes. But typically, I have noticed after 45 minutes, it's just evident that banks do typically their daily routine of their sweeps and liquidations, because typically liquidations is what kind of like renews, revamps the market with fresh blood, right? To prepare for the next day. So again, everything is calculated. That's literally the part of standard deviation. Standard deviation, if you just Google search it, just do your own due diligence. Everything in standard deviation is calculated. It's algorithm based. It's literally AI math programming that we have to enter to as inputs for people to um, or for the markets to move. So every tick, by the second, by the pip, by the point. It's all calculated. Now, yes, sometimes when you see a massive gap, 1 minute, guys. Let me just finish this text. So, what was I saying? That's standard deviation. So, if you just do your math, if you just do your back testing, you will easily understand why basically all three of these strategies work. Now, even people don't understand it, but if you have a strategy and you trade, uh, even on a bank holiday, and if it doesn't work, that should kind of prove to you that your strategy is legit, because strategies will work bank even on days that bank holidays are not effective, just because bank holidays are literally things that give volume. So now there's something called, I don't want to say the name actually, but it strictly relies on velocity. In other words, strictly relies on volume. It's a great strategy. It's very similar to mine. However, the only problem that you have is that, I mean, we're in 2026, day trading futures and Forex, and you want to basically take a 20 to 30, maybe even 40 points of a chase where it could simply just do a retest, or it could reverse at you, and then by then you would have already entered. Now you see that's a huge flaw for being legit. Um, that's a huge flaw. I just don't really know what to say to those traders, but you could have made a bigger bag, you could have made more of a bag, but your strategy is flawed on the part that if we change presidency, or if we change, if we, or even if when we went, when we were trading during Biden's presidency, this strategy was not really that effective. Yeah, sure, it's gonna work no matter what. It's just not as effective, and no matter what, you're always gonna have a huge slippage. That's actually number two that's bad on that list in terms of strategy, for that strategy, I should say. So your strategy, if it's legit, you don't need to rely on a bank holiday. Um, you look at all my charts. We can look back right now. Use Tradu, Black Bull. On the top left, does it say indicators? I do not use no indicators, man. Look at all my trade recaps on my YouTube or whatever you want, wherever you want. I actually use this, and I tell you guys, and as I was just doing, I told you guys exactly how to read the markets, right? So a lot of people don't know how to read the markets. A lot of people don't know how to read the charts. A lot of people don't even know how to read the candles. They don't even know what candles are. All they know is that something's happening in New York opening. It just moves 100%, 100 points up, 100% guaranteed. There's no logic behind those thoughts. So when you put it like that, and to kind of answer one of the, I guess if you will, he's a student. He basically was asking this morning, well, strategy, day trading is gambling, but if you have a strategy, it's less of gambling. Well, if you have a strategy, it's not. I generally would love to argue it's not a gamble. If you know what you're doing in life, there's a potential and possibility of risk that may pose as a threat nonetheless. However, it's not gambling at that point. You could still argue that it might be an educated guess. I'm gonna see eye to eye with you on that part. However, it's not gambling if you know what you're doing. How could you consider gambling when, by definition, gambling is you don't know what the odds are against you? I always know, no matter what, where to stop out, where to take profit, how to manage my positions. Even if it goes south, I know where to cut it and when to cut it, and exactly, I know that risk. I know that what the loss could look like, whether that's 14K in reds or negative 15K or negative 30K. I know that risk, and I still show up. So no, I'm not gambling. I know that. So you guys have to do that. You guys have to think about the math. You have to think about the numbers. I mean, day trading in general, a lot of people, no matter what I said about this friend's MFFU account, you still have to do the bare minimum and understand basically your numbers, what the numbers could look like for your account for that day. For that trade per setup. If you can't do that per setup, then you are by definition gambling, because you're not thinking and you're not putting much thought behind each one of those trades. So, talked about everything now. Talked about everything. Just as a FYI, banks can sweep literally pre-market. Those have literally fucked me up in massive ways. Um, it can happen as early as 6:17 a.m. Again, we're talking about PST time zone, guys, West Coast. It can happen. It can happen a minute or two pre-market, right before the market opening. It can happen a few seconds after market opening. That's very very common under this current presidency as well. Um, Now, here's the thing: a bank sweep doesn't always mean it's out to get you. A bank sweep, in other words, can just mean it's just taking time, a little bit more of a time for it to pan out the way that you intended for it to, right? So you gotta be patient. You have to be straight with your. Like this morning, I wanted to take another buy. She came down to basically my bottom. Actually, I'll just show you guys. I'll just show you guys. Actually, you know what? We better show you guys on this one. We're here to talk about it. We're here to talk about it. My charts. Where's my chart? So, talked about it. I even asked these guys, look at my chart. No wrong answers. And why do I have these two levels marked up? And I want to just hear people talk, right? So let's talk about it. It's funny enough, I wanted to basically see that a simple retest of the blue line. I know you can't really see it much because price is literally on the blue line, but it shows it over here. Blue 24,833.31. I actually wanted to see a massive buy here when this red candle, the first red candle, had actually came below. And as soon as I was getting ready to gear up for a buy, soon she actually came below the blue line. She was holding over here, and I wanted to just basically trigger buy, but then she immediately came a little bit below, and I just wasn't seeing any support down here. At that point, I was kind of scared that she could easily have made something into resistance and she would just keep dumping. So I did not see anything worthy of taking a buy down here, and that's immediately when she was holding here for a solid 4 minutes, and then immediately nowhere she just that wick, she just came down. She basically liquidated buyers. Could have been me too, because I mean that was a massive one. It came down, I don't know the price, but it came down pretty far. I want to say that was as much as a 40-point dump, give or take. I just know my broker, I was not willing to risk that much for a like a buffer zone, if you will. So these type of trades is pretty simple. I mean, I know I'm always using the word pretty simple, but you know, this is the type of stuff I want to really push onto you guys. You guys have to look at the past. You have to look at to the left. You have to zoom out a little bit. It really helps me understand. You know, well, came down, came up, came down, came up, came down, came up. It's kind of like this for me is too zoomed out. This for me makes so much sense because then I can look at it and be like, oh shoot, we came down, came up, came down, came up, came down, came up, and now we're holding over here. She might want to hold resistance over here, over here, over here, and we could easily see it come down, or we could see basically retest and then go back up. I mean, it's simple when you have it basically all within the same frame, the same screen frame, if you will, right? Now, what helps a lot too, guys, I don't really recommend this, but just for the sake of, I actually really recommend using the brush, just like how I did, but just for understanding exactly what's happening, right? This is why I don't bother with fucking up with my candles, because green means up, red means down. A lot of people want to get creative with it. I generally don't give a flying fuck, and I don't see how it can contribute to anyone's success, in all honesty. But you do whatever is eye appealing, because if it's eye appealing, it definitely catches your interest, to say the least. But another great way to kind of understand what I'm looking at is this. People don't understand it. Markets will always pull back and will always bounce somewhere, right? See, now they're always doing this. What was holding over here, held over there. Sorry, that was a pretty bad one. Roughly. And then if it comes down, It's gonna do like that. We want to see basically hold resistance there, and then you're gonna create a lower low. It's day trading is literally just this drawing. In other words, it's really that easy. Now, I was actually looking at one. I could actually show you guys a few. Look at over here. Came down, bounced. Where look where we could expect to take buys had this one came down here, but it didn't. It already made us move back up, but it came back down. So where could we expect it to hold? Look, now if we put a line there because we're not sure how reliable the support is. Let's look to the left. Oh my God! Look, right? Look, this is support and resistance, right? So in other words, and I want to talk about this one to the left. Yes, this one broke it, but immediately she didn't. We wanted to basically see it come up and either retest it as resistance and then try to chase it for a final sell for the final dump, or we wanted to basically see this come back up, which it did, and then we want to see it come down, retest it, and then we would take a buy and come back up. I mean, look, this buy was at 8:30 a.m. That's 2 hours after market opening, right? Look over here. This was literally 12 p.m. my time. You look at this one. This is 8 a.m. my time. So you see how time is completely irrespective. It's one of those things that completely has no property, meaning this is a strategy that doesn't matter what happens at what timing. It doesn't generally make a damn difference, right? We look over here, we could see it holding. Again, this is not. Oh wait, that is New York session. I want to find one that's not New York. Yeah. Actually, that's a good one. Yes, that's a good one. Look, you see these little two hills, they're holding support over there, came back up. Sure, it was very subtle. I mean, but ideally you take a buy here to create to take TP over there, and I mean that could literally be as much as 14 points. We don't, you're kind of trading at 1945, so that's 7:45 my time, 7:45 p.m. I don't know what session that might be. It could probably be Asia's or Tokyo's, maybe, I don't know. But then let's say you put a line over there. Okay, well, and then take a look how this one tried to come down and then went back up. Now, ideally, this one was 11 points higher than basically 834, right? So say 840, 843, actually 9 points of a difference. But you see, this is a worthy support zone because it was once used as resistance and it had wicked it, right? So it can be used at any given time, and that's just how support and resistance works, truly, right? So if you don't understand this, look at this. And then when you understand this properly, then get a brush, right here. Get a brush and do your charting, right? Do your charting. So do your charting. It's pretty simple. When you do your charting like that, then you have to ask yourself, okay, where is it holding? Now, if we came up, down, up, down, up, we want to see basically hold somewhere in this area. And which it did. It held over here and then pushed back up. So really, really simple. I mean, I could do this literally all day, even in my sleep. Sure, some trades go against me. It is what it is, right? So we talked about that. Still New York time. I mean, New York session is the best time to trade strategies. We talk about this. We don't need no indicators. And a lot of people, here's the thing, people day trade, right? So are you hoping, day trading by definition means you're like scalping. You're not here to basically take trades longer than ideally the time frame that you want to look at. That's another perspective to kind of consider. Nobody says it, but that's something that was going on in my mindset a long time ago. Now, I used to look at the 1 hour time frame, the 30-minute time frame, and I used to frame those two, and I honestly used to use both of them hand in hand. So NAS 30-minute, one chart on my left, chart on my right, NAS 100 on the 1 hour time frame. But then I was like, and though those were very clean, I just realized the 15-minute time frame was so much cleaner, and that's just how things work, because sometimes you realize a certain time frame might be too big, or maybe the market's getting more volatile, more volume being incorporated, and then you just need to realize that, okay, a so and so time frame is better. And then when you use so and so time frame, just like how I was basically breaking down these trade recaps and just talking about market flow and how to read candles, so and so, you understand. Um, you understand that you just want to take basically like what I said, right? You if you take a buy here, you want to basically create that, take profit at the highs, and then you have to adjust your, even though that's part of trade management and the trade risk. However, you don't want to be holding the trade and then say it already comes to basically highs, the highs of New York session, or the highs even the session before New York, and let's say you want to see it have a home run. No, in best case scenario, in majority of times, she could literally have, since she already created new highs or she's already waking new highs, she could easily come back for a retest or just immediately just sell off, right? So you want to understand exactly what it's doing, and you have to understand, in other words, the trade risk. So I do want to talk about Monday through Friday agendas, and what I mean by that is, now this is typically referring more to traditional stocks, traditional investments, but honestly it's very, very evident to complication of stocks. What that means is NAS 100, US 30, S&P 500. Now these are indices, in other words, CFDs. In other words, what that means is that these indices are typically complication of stocks. NAS 100 is the 100 top tech companies. US 30, or what you guys call YM, is the 30 top performing companies in the United States of America, right? So S&P 500 is typically, a lot of people like to use this as as a retirement plan to invest their money in, and it's so reliable because no matter what, it's always going to be replaced by the top 500 performing companies. Unlike NAS 100 and US 30, those any company can be booted out at any given time, and with S&P 500, when a unlike S&P 500, when a company gets booted out, there's not really much of a change in volatility, momentum, or volume. You get what I mean? That basically, it's one of those things. It's like a company, out with the old, in with the new, but no matter what, you're always going to be able to advantage, or you're always going to be able to benefit from the advantage. So, in other words, Monday, or with that, all that's being said, right? Monday, we typically want to start off, and it's probably best if I just draw it. Monday, we want to, let's see if I can see it. But this Monday was a holiday. Can this one show it? What was this Monday? Yes, it was this Monday. This is a great Monday, guys. I want to show you guys. Now, I'm just gonna do that. I'm gonna show you guys New York opening. New York opening, of course, came down for a massive push up from the wick to where it is right now. That's what? That's almost a 200-point move, right? That's 194 points to be exact, or to round up, I should say. Now Mondays typically want to basically create that space up, right? Tuesday she wants to come down. Wednesday she might want to go back up. Thursday she might want to come back down. Friday she might want to come up, might want to test this, and then, but nonetheless there's this big imbalance, and she wants to basically come down to basically close it and minus and maybe end that week red, right? So Mondays and Fridays are very heavily agenda determined and heavily agenda pushed, and what that means is that for every Monday, if you have a heavy push up on a Monday, you could expect a nasty sell off on a Sunday. Now it could also be very true vice versa. Now if you have a nasty sell off on a Monday to start the week, that's typically very, very negative and cautious thing to keep an eye for the remainder of the week. If you have a nasty sell-off on Monday, then that means Friday we can have a nasty, nasty, nasty push. Now, when you have a holiday on either Monday or Friday, typically the start of the week, it kind of makes Friday a wild card in aspects of drama. But sometimes, in most cases, most traders will say price action in that case will be choppy, like last Friday. Since last Monday, I think we had what, President's Day, or I forget what holiday it was, but or Martin Luther King's Jr. I forgot what holiday it was truly, but we did have some type of holiday, which was a bank holiday, of course. So that's what I mean by agenda. Um, Now look, I also want to emphasize something that kind of came up to my mind. While I noticed this whole trampoline idea, basically, like every time price action comes down, she immediately pushes back up, or every time she comes up, she nastily, that's not even a word, she just immediately tanks with a heavy volume, almost like it was determined, almost like it was planned. So that whole trampoline idea, that whole trampoline discovery, I kid you not, in my notebook for the first 2.5, 3 years of my trading career, especially when it came back to options trading, and then especially when it came back to Forex trading, I believed so much in my trampoline strategy, and it decided, and it definitely showed me so much truth, right? That it held pretty well in the markets, and it just made me realize that this trampoline strategy, definitely I struck gold with it. Penny stocks, I mean, it was more of a like typical traditional trend uh breaks type of trading and outbreaks. uh Very channel based, and I used a lot of buy stops. That was basically penny stock trading. Can't say that with any other style of trading. But anyways, I have never ever traded anything else using any other strategy. I mean that. You come over here, you look at NAS, you look at Forex pairs, you look at all these pairs. Should I have? You saw something over there. You might have something. Yeah, down here, you have so many of these lines. You come over here, you have so many of these lines. While the US dollar is not doing well. You look over here. I mean, funny enough, it kind of had retested this, and it literally had tanked. That's for, oh, that was last week, as a matter of fact, last two Mondays ago, right? I have not touched. So this would be US dollar to Canadian dollar. I have not yet touched this in long times, man, long times. So that's crazy that it actually worked well. I mean, it was not planned. Oh my god. Look at this. You know, there's lines everywhere. Support and resistance. It stays. It does not go on. It's just, I like my charts clean and clear, right? So look at over here. What am I doing, dude? Oh, that's. You look over here. So it's nice. Hold up, guys. I think I have a call here. Oh, I see what I got. So, you know, BTC, I think I try to keep this one clear. Yeah, I try to keep this one clear. I'm also in BTC, man. This one, though, is looking real iffy. Real iffy. A little bit scared of this one. I might have to kind of call quits on this one. But anyways, I mean, for all I matter, I'm still up in profit. I'm actually really well up in profit, actually. So, just not trying to make that same mistake that I made last time. Basically, I took profit out at 97,000 when I entered at 62. While that was amazing, I want to take more than just a few $1,000s of profit per Bitcoin. So, give or take, of course. So that's that. Look, support and resistance works with all that. That's exactly what I was showing you. Each one of those lines is support and resistance. Okay. Now we go back. Uh, Trade risk. I mean, I'm gonna try to make these next two slides pretty simple, or all these three slides. Really, that's all that's left. People don't understand that. You have to understand risk to reward ratio. Now, I hate to be that pooper, that party pooper who basically talks about um that kind of exposes somebody. He's a futures trader. He also called me a piece of shit after looking at my profits, and I showed him literally the withdrawal email and the little online broker journal from my broker, and he was like, "Fuck you, this and that." Literally, just futures traders are so salty, and then his mods ended up banning me from his server, and it's just so stupid. I mean, and he's trading his own prop firm over here. If you can see it, it's I'm not gonna say the name. I want to have some human decency. To be brutally honest, I should better than this, but risk to reward. Look, I mean, you can see it over here. I'm gonna try to zoom in. He takes a buy. He always uses limits, which is honestly something that I used to use for literally all the way until early of last year, or maybe 1.5 years by now. So use a limit. He has that whole stop loss and take profit by default setup. That's good. It's just he has a negative RR. He has a negative RR, risk to reward. In other words, that's what RR is short of. So if you're taking one of those shitty trades, if you have a negative RR, if you're basically understanding that your risk is far greater than your profit, then it's not worthy of you to take that setup because it's not that of a quality setup, right? It's not quality enough of you to take it. And when you pose more of a risk that on that trade, you have basically a higher chance of either taking a nasty loss or for all just blowing your account up. That's some big words that we want to avoid in this space, in this career, obviously, right? So you have to understand trade risk. It's best to honestly just sit out if the risk poses as a major threat. No trade is even better than taking a negative RR trade. So also, I kind of want you guys to understand. Actually, I feel like I try to take this picture and use it for trade management, and this picture should have gone here. So as I'm realizing it right now. Now, actually, I can see how both these would play out. Now, why I generally think people should use the 15-minute time frame at the very smallest. I think 5-minute time frame is fair game too. I don't think it's the best, but I definitely don't have any complaints on it. Just honestly, just not something that I think that could tell you the stories and evaluate NAS 100 and US 30 like how I do, right? Now, if you go on a 5-minute time frame, I mean, it's just a lot more. The smaller the time frame you go, the more noise there is. And I mean, how can you ideally see that we were trying to hold support down here, right? So you can't. I mean, actually, in this case, it probably would look pretty crystal clear, to be brutally honest, but it makes you want to look at more candles. You have to do more of an analysis. Whereas if you go on a bigger time frame, sure, the 15-minute time frame is big enough, but also small enough, and that's what I need, right? That's what I need. So make things easier for yourself, guys. Don't make it easier for yourself. Don't make it stressful. A lot of you guys chase whatever makes it harder for you to trade, to be brutally honest. This guy, look, he has 3 charts, and I'm not trying to talk shit. I'm just trying to just use this as educational promises. I mean, educational usage, because that's just how trading works, right? You don't really understand that you're making a mistake until you kind of already fucked up. And some other people don't really realize their mistakes until they see it from somebody else's. So I don't know who needs to see what and how to help what, but I can definitely show you guys and of what's right and what's wrong. And I know for a fact that's also what helps me. That's what had helped me a lot too. So you got the 5-minute, again, all 3 charts, all NAS and Q to be exact. It shows right here. 5-minute chart, 30-minute chart, 1-minute chart. You see how he's limiting himself, right? Basically, he wants to see confluence on all 3 charts. He wants to see confluence on all 3 charts, and plus he wants to basically see what's this green thing called. So he has that indicator, then he has that indicator, the moving average. I don't know what that one, I think he calls it IB, which is basically a type of support and resistance. It's automated. Of course, he's using indicator, so it's gonna repaint. And he has this reoccurring so many times where basically he gets in a trade. Next thing you know, he takes support. He takes a buy off of here, right? And this was one of the trades that he took. He took a buy over here because he was holding it. Next thing you know, it came down. He literally got stopped out. Nasty trade, nasty trade. And this is a dumb trade because then IBM actually he took the buy. It was a little above that wick, and then it came down, as you can tell. So that was a pretty dumb trade, and that's exactly why I took a screenshot of it. And then you can see it, daily net profit loss. I mean, he trades 20 accounts, $120, negative 120 per 20 accounts, or I should say per account. So it would be 120 times 20, 120 times 20 plus the commissions that he also owes, right, per account, and fees. So that's not how you should trade. You should never look. He has 1, 2, 3 indicators plus 3 different. It's like 3 is his favorite number. He got 3 indicators, 3 different screens. It's not proper trading. That's actually what I want to call bullshit trading. Don't make it complicated. I don't do nothing like that. Look at my chart. Is my chart, look at any of my trade recaps. Is any of my trade recaps or any of my charts like that? No, man. I straight up show my charts in Discord, man. Literally. I send it exactly what I take, how I took it, and then I break that my thought in each one of my trade recaps. Please, I don't trade like that. Who should ever trade like that? So I even asked these people, like, I don't think it's rocket science, right? Top level looks like clear resistance, bottom clear support. 2 levels are just SNR, support and resistance, right? So fire, amazing. um I just sometimes just don't get it, right? So look, but what else matters, and before understanding trade risk, actually it's more so after trade risk, is the management. So the stop loss is your best friend. It's there to protect your account if the trade goes massively against you or even small against you. You have to understand where to close the positions. In other words, where your stop loss should be. That's going to be in a different video where we talk about stop loss and exactly whether you should be accepting of that risk or whether you should call it early as if the trade goes against you. Again, another video. This is just more of an introductory. I think this is a pretty deep and great introduction to the mentorship and what to expect for it. However, this is really just the biggest one and the most knowledgeable episode of the mentorship that I'm gonna start the series of, right? So there's gonna be 2 more episodes. But anyways, stop loss. If you're up in profit, if you're ever up in profit, you should never walk away in a loss, because here's just the hard truth. A simple 20-point scalp. Say I'm trading like my accounts. One trade I was trading basically $1,900 per trade, right? So I mean, check this out. $1,900, actually it was 1901. I always like an odd number. It's kind of a thing in my religion and culture, if you will. You times that by, say, 20 points, right? That's 38K minus commission. That's basically 37. That's still 37.9 that I'm walking away with. Its commission would probably be no more than 15 to 20 bucks, to be brutally honest. But say I'm still walking away with almost 38K, right? So, but here's the thing. On a 20-point scalp, on a base minimum lot size, which would be 0.01 lot size, times 20 would be just 20 bucks, right? So you have to understand that positioning, lot size, huge differences. It's just a lot size. You don't ever want to really get dishonest or disheartened by the two. You have to be extremely comfortable with understanding that you could trade, if as long as you keep moving your stop loss to break even, because hey, it could get you to here. Look at how many, I mean, these are all 0.41 lots is with this broker. This was a much older broker 2 years ago. You can look at timestamp. This was when I went on a 26-day win streak. Then I got hit with this. But I scaled this shit from 4,600 to 12K in a span of, I think that was 2 months, and that was when I was really, really, really just taking things slow with only one trade per day. So, I remember this is actually my first year in no, this was my second year in trading Forex. So a lot of people who are taking 2 years and plus, or if you're in your third year day trading Forex, I already beat you, dude. That sound like an asshole, but you look at all this green. So, but people don't understand. And yes, most of these are scalps. Most of these were break even trades. But here's the thing: $70 per point, and I just made $657. That's just 8 or 9 points of profit. But I walked away after moving my break even, and I was able to take a withdrawal of almost 2K. Right? And that withdrawal out of the 2K, $300 had to go to take care of that loan that I had basically loaded this account with. So I had already basically paid off that loan that I literally took out just to get started on this account flip. So you see, consistency is always gonna help you win the game. What also matters is, again, we'll talk about momentum later actually, but we already did talk about this. It's basically, and I was also talking about how this morning in my Discord I was talking about we have a wide range, and that's, remember I was telling you guys, I was showing you guys with one candle it was like 143 point dump, and I was like, well, I don't know where it went. I don't know which candle it was, but it was a massive dump, and I was like, well, then that means we have, oh, it was this one. Remember? 132, different broker. Remember, so that just means we have a wide range. If we basically if we were up, down, and then we had a massive down, that means up, and we're going to have a massive down as well. We have a wide range because that means that we should fulfill this, or we can immediately just close that. We have basically a huge range, a huge gap to basically fill the space in. So, that's how you actually should understand basically ranges. Momentum is basically determining how price action is reacting by the minute. And now if she's rejecting something, if you're in a sell and she's rejecting over here, I would immediately panic and immediately take profit, right? Because at that point I'm already up in profit. I'm probably already 30-40 points. In this case, I did take profit early. I was already 31 points in profit. Again, different numbers with brokers and TradingView. I was 31 points in profit, and I was like, you know what? I want to basically walk away while I'm still up, because that 31 points was great for me. It was amazing for me. And plus, I had full port of that account since it was a fresh, new account. That was Friday. So, but if you want to re-enter, you can always have re-entries. Say you just closed out for 3 points, 4 points, 7 points, 17, 13, 14, 20 points in profit, and because you were trailing your stop loss, which is also a great idea. That's also what I strongly and humbly recommend you to trail your profits. You secure your profits. I mean, nothing in trading is guaranteed until you basically adjust your stop loss to break even or to secure profits. Then that profits or something of some sort is guaranteed. So, we'll probably hint about stops, limits. Actually, I already did talk about it earlier with this guy. But, there's different type of market executions. In Forex, market executions are called buys. Or no, it's called bids and asks rather than buy and sells. Limits, if you want to basically see price react as a bounce for the intended direction. Stops is like you put a price somewhere. If it comes through that, if it passes through it and goes in the intended direction, then you're gonna get filled. Pretty simple. Again, we talked about this journaling. It holds you self accountability, and then when you can see self accountability, because look, I said no more US 30, right? I always fucked up on US 30. No more PPIs. I mean, eventually one part I had so many of these. I had red, orange words. I mean, notes over here to the right of notes. Actually, I didn't have a notes column until after I cleaned this journal out a bit. But what I really, I had so many childish things too, to be really honest, like no trading on, and it was with this journal, no trading on manufacturing day, no trading on, the first Friday of every month, whatever it's called, NFP, no non-farm payrolls, right? No trading on that day. Don't trade on CPI days. And then I realized as I'm trading and I'm getting more experience with the Forex day trading of things, realized, okay, we're only going to stick to NAS because that's what I really fuck with, because the volume is not as bitter and as gruesome as US 30. So it also gives me a chance to move my stop loss. People don't think about that. PPI days, I just realized still to this day I hate PPI days because the price action is so choppy, but sometimes it can give you the cleanest setups of the whole week. I mean, perhaps even the whole month, but it just makes it so choppy, which I don't fuck with. CPI trading is honestly a lot easier for me and direct for me to see it rather than PPI uh, trading. So you learn through trial and error when you see all these things, but you need a journal, right? So this is my little journal, if you will. But with all that being said, I mean, you guys understood basically how, I mean, the gist of how I basically look at all these things right now, how I look at these charts now, what these charts mean, what these blue lines mean. You should be able to understand it. I shouldn't even have to tell you much. You know what would be a good homework for each one of you guys that watch this mentorship and that want to drastically chase your freedom and create pave a way towards success in day trading. You're gonna watch all my trading recap videos. I'm not gonna say all, but you should binge watch a good handsome of them. I mean, I have what, 82 videos now, give or take, maybe 83 with this one. um Understand each one of those videos. You could skim it, you could change the speed quality of those videos, that's sure, that's fine. But each one of those videos, after watching this multiple times, I hope you guys took some notes, noted down some important things, whatever is important to you. I spit a lot of things, I know that for a damn fact. But a lot of things should be easier for you now. So as always, I hope this genuinely gave sauce to a handful of you guys. I know there's gonna be someone who says I still don't understand. I just, I spent a lot of time. I clearly took 5 attempts recording this. Um, that's why I delayed this for so long, because regardless of my language, I still wanted this to be something worth of a high caliber from me to you guys. Consider it as my little gift. Merry Christmas, happy birthday, boohoo, nigga, whatever, right? So, um, yeah. My next episode is probably gonna be in 1.5, maybe as long as 2 weeks. I just really just want this information to be soaked in, and then I'm gonna be making trade recap videos plus whatever lesson plus whatever any student either ask me in the mentorship chat or in direct DM. So, um, again, this is gonna be unlinked on YouTube. I'm just putting it as a link and on YouTube, and then sending you guys the link. Only you guys, just because you've been respectful of me thus far, and that's, you can't spend money on respect. You can't buy respect. So, peace, love, cheers, and please, as always, give me some feedback, give me some commentary, give me some where I could improve or what you liked. I mean, anything and everything would always be helpful, right? So, as always, and once again, peace, love, and cheers. Thank you.